Well, hello there, my friends. Chris Marcus here with Arcadia Economics. And today we are going to dig into the gold and silver markets and an interesting trend that's happened in the past couple months. It's been a little quiet, yet here we are with a war in Russia, and we're actually seeing gold and silver being used as money again. Certainly, that's something that for decades was looked on as conspiracy theory or one day, although certainly with Putin backing the ruble temporarily with gold. And we'll also dig into some of the trends in silver. Fortunately, I have two silver experts on the line to join me today. Peter Krauth of the silverstockinvestor.com and also author of the new book, The Great Silver Bull. So, Peter, welcome on in. How are you today?
I'm great. Thanks for having me here, Chris.
Well, it's a pleasure to see you again. And also joining me is Andrew Pollard of Blackrock Silver, certainly an expert, particularly on the supply side, although very well versed in the market. And Andrew, great to have you here as well. How are you doing?
Hoping to be an expert on the supply side. We hope to be in a situation where we'll be able to start supplying it right when silver starts on that epic run that I think we all know is on the way. So great to be here.
Well, I think so. And we'll also touch on the silver supply and demand fundamentals that are in a deficit and don't seem like they're getting any easier. But to dig in, and Peter, perhaps you can comment on this one first. Here's even, this is a couple of weeks ago, but as inflation slows and ruble rallies, Russia is hoping to avoid a financial crisis. We come down here, and how are they attempting to do that? And you see the Central Bank of Russia resume gold purchases on the domestic metals markets. And as gold is traded in US dollars, this enabled the CBR to link the ruble price to gold and set the floor. So certainly that sounds like gold is being used there as money. What would you say about that, Peter?
I'd say that it certainly is an anchor for the ruble. And if you look at, I think what's maybe most interesting about this is what triggered it, and the fact that, Russian held treasuries, for example, were frozen, meant that they looked for an alternative. And Russia's been stockpiling gold. That's not a secret, and it makes sense that they would peg it. And we saw the reaction right away. The ruble gained in value tremendously after that. But I think that if you look at a bit of the wider perspective, what that's doing to the mindset of other large investors, sovereign investors, large individual high net worth investors, they're looking at this and they're saying, "Oh, really? You can freeze my dollar assets anytime you feel like it. Maybe I need to look for alternatives. Maybe I need to look at what Russia found as an alternative. And gold and silver have been money for thousands of years. That's not going to change. And it's likely that, the last 60 years of silver and gold not being part of our money is going to be just a tiny blink of in terms of history. And in some form, at the very least, whether it's officially backing currency, I think that both these metals have a long way to go in terms of a secular bull, just because where we're headed is tremendous inflation and tremendous fall of all fiat currencies.
I certainly think so. And Andrew, it's not like these events came out of nowhere. If you've been watching, you can see a lot of these things building, which I think is why we're in the positions we're in now, where we're so fascinated by how it plays out. And we don't need to get into the details of the politics or the military, but it doesn't seem like a situation where there's an easy, okay, we resolve it this way. I mean, a lot of this is based on financial tension and debasing of the dollar that's been making it difficult for places around the world.
Well, I don't know about you, but I was told that inflation was just going to be transitory. So, maybe this is taking everyone by surprise. I mean, I don't think anyone really bought it when they were saying it back then, but everyone's feeling the pinch now, and it's the currency debasement. I mean, that really does highlight the monetary metal aspect of silver. Most of the discussions, over the past few years about silver has been focused on the industrial application side, on solar panels and the electrification of society and the part that silver plays in that being, the best conductor of electricity there. But what's old is new again in terms of silver being looked at as a monetary metal. I mean, our project in Tonopah 90 years ago actually the silver supplied from Tonopah helped to rebuild England, London, the UK after World War One. The U.S. government actually sold Tonopah silver dollars. They were called peace dollars to London, so that they could use that to backstop their currency in the rebuilding of the war. So here we are, 100 plus years later, and you're looking at countries doing just that again. Tying their currency back towards something a precious metal like this, and it's good to see. But there are ultimately two facets to silver. It's both a monetary and industrial metal, and be nice to see demand pick up for both, because here we are, $22 silver. This time last year it was $28 and looked like it was going to start going higher, and just be nice to see to see it start regaining its luster.
Yeah, well, it's certainly interesting when you mention the history there, because over the last 100 years, it's not as if the Fed has been sailing this ship clearly. I mean, now they're admitting they got inflation wrong, to the degree that even moderate Democrats pushing their party to do more to fight inflation. Most of those plans usually call for spending more money. And here, in the meantime, we see the silver supply in a deficit the last 3 years. Silver Institute projecting a deficit this year. And of course, last year we saw silver retail bar and coin demand up 36%. And Peter, I don't think it's an accident. A lot of people haven't had to deal with this in their lifetime, but now the things that our fathers and grandfathers were warning about are happening.
I agree completely. If you look at what happened in the 70s, so that's 50 plus years ago. If anyone was old enough to experience inflation in that period, they'd have to have been, let's say, 10 years old or older. So that if you look at the demographics of that in the US, at least, that's 2/3 of the population that realistically have not lived, understood, felt what it's like to live through a real inflation. And so, to Andrew's point of a little bit earlier, I think that one of the problems is that we're seeing this from our point of view, where we follow these markets very closely, and we're kind of surprised that people are not grasping this inflation or believing that it, earlier back, let's say last year, that it was transitory. But with so many people not having lived it, I'm getting the sense that a lot of people thought that it was going to be transitory. They did buy that, and they thought, oh, okay, so this is a spike. It'll go away. Prices will go back down. Gasoline, be back to sort of relatively normal. Food will go back to relatively normal. Rents maybe will go back to relatively normal. I think from our perspective, we saw that was just unlikely and impossible. But I think that in the next several months, you're going to have a lot larger portion of the population finally feeling that sinking in, and you're going to get this acceptance that that's not going away. At the very least, even if inflation, the growth or the acceleration actually slows, these new high levels of prices are at least baked in, and so we're not going back. This is going to stay where it is, at the very least, likely to keep climbing, because as you said earlier, the solution, everything looks like a nail when you have a hammer. And so the solution to, all our problems are going to be to print more. Let's expect it. And this inflation is not going anywhere. It's just going higher.
Yeah, and I appreciate pointing out how it's, when they talk about the inflation rates coming down, it's still, prices are still getting higher, just not as drastically. Although I don't think people are going to care if they're still paying elevated oil and gas prices and energy prices. And you look at those commodities, which would think have to filter through at some point. Andrew, in terms of silver, though, after a decade on Wall Street, a decade beyond, if I don't want to spend my time digging through what's the latest tech stock or IPO, and I just want to save something, I'm not saying this is right or what others should do yet. If I see the dollar being printed and I'm able to take a step back so I don't have to care on a day-to-day basis, That's why I buy silver. We do sales for Miles Franklin at times. And I think a lot of the people that I hear that are calling in are feeling the same way, where we see the dollar being debased. Is that fair to say that A, that counts as money, and B, there's a lot to suggest that's going to continue and grow as a trend?
Right. Well, I mean, there's multiple ways to play it as an investment. Obviously, owning the physical metal. You could also buy silver stocks just through an ETF. The Silver Junior Index. That's a pretty great way because obviously having the precious metals in your hand is one thing, but if you really want a leverage call option on the price of silver, you get that leverage by buying growth stocks within the space. So whether it's a producer or whether it's exploration development stocks like mine, not only are we tied, the silver index, our stock price, tends to perform in similar fashion to that. When it goes up, the rising tide raises all boats, and when it goes down, oftentimes if silver takes a beating, then the stocks go even further down. But when the tides start rising up, they tend to outperform the market. So I look at what we've done with Blackrock now. We've just put out our maiden resource estimate on a discovery we made 2 years ago in a very famous district. We're now backstopped by the highest grade ounces in the ground in the industry, and we've got three different ways to add value now. One is obviously silver prices go up, interest comes back into the sector, and all stocks tend to perform well. The other way is we're now pegged to the our ounces in the ground. So right now we're trading for say about $2 US an ounce in the ground based off what our resource shows. Well, one way to add our value is add more ounces, obviously. The other way is to ratchet up that ounce in the ground valuation by de-risking the project further. So, there's a company called Silvercrest, which is similar project to ours, but they're just entering production. So whereas we're getting $2 an ounce in the ground, they're now commanding $8 or $9 an ounce, right as they've de-risked the project up the confidence curve. So it's there's multiple ways to play it. I've got a whole bunch of silver here at my house, but obviously I'm all in with BlackRock and some of the producing mining companies too. So, but at these prices, I mean, very few companies are able to make money with $20 silver and $100 plus oil, right? I mean, it's a high cost environment. So what that's going to do is it's going to start eating into the supply side. You are going to start to see projects get shuttered, not advanced. At the same time that the industrial side, the demand is growing robustly, and obviously as the monetary metal side comes back online too. So, as they say, the best cure for low prices is low prices. But we're lucky to have a high grade project, which should work in any price environment. So for us, I'm not a day trader. For us, it's just about deploying capital. Our discovery cost right now is about 62 cents per ounce, and we trade for $2 US an ounce. Well, that's a pretty good return on investment if we just keep doing that. So it just makes me excited to spend more money and take the project forward.
Yeah, and Peter, what would you say about that, where we see the price on the lower side of the range, yet everyone I talk to indicates it's getting harder and harder, not just for the silver explorers or producers, but also the copper, zinc, lead miners, where we're getting a lot of the silver as a byproduct. Is that matching what you're seeing?
Absolutely. In fact, I was just looking at some data on that earlier, and you know what? Let me pull that up to make sure I've got that right. The average silver price, if we go between say 2005 and 2020, the average silver price was up about 185%. The average ore grade went down by 55%. So the value per ton of ore actually is only up by 27%, despite the fact that the silver price is up almost by 3 times. So this is an interesting quirk with silver, is that if the price goes up and stays up, some miners are very conservative. So they're going to say, well, I need to see this silver price be high and stay high for quite some time, an extended period, before I'm willing to invest more, expand, or look for more silver, whatever it might be. So, and even when the price is up for a while, let's say silver goes to $30 and stays there for a year or a couple of years, they might say, oh, well, this is fantastic. You know what? I can stay just as profitable by mining lower grade ores now, producing less silver with a higher profit, per ounce, keep my profits even to where they were previous to the price gain, and actually produce less silver. So you could argue that a higher silver price might actually encourage less silver output in that kind of scenario. So these are the kinds of quirks that are really interesting to watch and to consider when it comes to silver supply. And just to go back to your point before about silver being money, keeping up with inflation and so on, two sort of little facts. One is that people are complaining about silver at $22, and I get it if you're a miner, because obviously you need to, your costs are high, your costs are going up. But for someone who owns silver, I think if you look back at the period between 2017 to 2019, even to early 2020, silver averaged about $15, $16, $17. We're about 40% above that now, even at 22. So, when people say, when's silver going to run? Well, I say, look back over the last couple of years. It ran. You needed to be in the market. And if you want to take a longer term perspective, I did the math. I went back and looked. And in 1922, 100 years ago, silver was trading at 68 cents per ounce. If you use the US's own CPI inflation calculator, silver should be $11.60 per ounce, and yet it's $22. So silver has doubled the average or typical inflation rate over the last century. So it's actually done very well over an extended period. And so those are my 2 cents.
I mean, certainly seems like there's a bit of a floor in place. Excuse me. And then you add on, in addition to Russia invoking gold into their monetary system, we've seen a lot of European countries repatriating their gold over the past 7 years, past 9 years now. And in the end, you still have this debt that someone's going to take a shiner on that. And to me, this is speculation, but I've never been able to figure out some way you resolve that without a reset. And of course, what has happened less than 100 years ago? Here's the Fed in resetting the gold price, increased to $35 an ounce, effectively increasing the gold on the Fed's balance sheet by 69%. This was following the Great Depression. We have another chaotic situation here where so far the only answer is to ignore it. So Andrew, again, we don't know the future, but does it seem to you like, or can you think of any alternate resolution to this other than that's the way business works? There's some sort of restructure or bankruptcy eventually done, and we don't know when, but what would you say there?
Well, geez, if I knew, I wouldn't be doing this. It's truly a question. I mean, it's quite a hole. Everyone's dug themselves into, and most of it was just willful blindness all along the way. But for too long, people were kicking the can down the road, and now it is becoming unsustainable. I mean, if it was just so easy as pegging the price of silver and gold, I mean, that would be one way. But I honestly, I don't know. All I can do is focus on putting our head down, adding value at a project level, and when silver does go, and when it moves quickly. I mean, as Peter was saying, I mean, even just 2 years ago, when we picked up our project in March of 2020, silver was $12. When we started drilling it, it was 20, and when we released our first drill hole, it was $30. That was all within 4 months. So, it's and even just the last 2.5 months. I mean, listen, the end of mid-April, silver was just under $26. It hit 21.50 within 2 months, within 8 weeks from there. I mean, all I can say is, being a participant in the industry, the volatility is a hell of a lot more fun when it's going up. But once again, I'm not a day trader. It's all it's something that I think anyone buying down here will ultimately be rewarded, because you can only keep a good man and a good commodity down for so long.
Well, I think we're seeing that now. And Peter, what would you say there? Do you see any other outcome or any thoughts on that? I know no one knows for sure, but history gives us an indication or a guide.
I completely agree. There's going to have to be some sort of reset, whether it's official or not. I think one of the things we all just need to do is look at what central banks are doing, not what they're saying, what they're doing. And what they're doing is buying a lot of gold. They really are. I mean, you just mentioned it. They're stepping it up. They're repatriating it. And if it's not by accident that if you look at what, in fact, I have a chart that shows exactly this in the book that compares the S&P, the Dow Jones, gold and silver in a single chart going back to 2000. So between 2000 and March of 2022, the Dow and the S&P are up about 200%. Silver is up about almost 400%, and gold is up almost 600%. That's over a 20-year period. I'm willing to bet if you ask the average investor, where was the best place to put your money in the last 20 years? Almost invariably, you're going to hear stocks. And yet, that's completely wrong. Gold and silver have more than doubled the return on stocks. Gold and silver. I'm not even talking about mining companies, just gold and silver. So, look back, do your homework, figure it out. These are secular trends. They started a long time ago. They have a long way to go. And the market's telling us what we need to do. We just have to see it and grasp it and act accordingly.
Yeah, I think so. And Peter, fortunately, you just wrote that up into a book. Could you let folks know about that? I'll pull up the page here and where they can find that.
Sure. So, it was released a month ago. It's called The Great Silver Bull. You can find it on Amazon in Kindle or paperback. And you just need to type in The Great Silver Bull and you'll find it there.
Well, I appreciate that. I had fun going through it, and a lot of good information you present there, especially on the supply side, which is not a straightforward equation. And Andrew, again, from Blackrock Silver, one of the people and companies that brings us the show each day. Could you let folks know where they can find you? And also, you had a maiden resource estimate recently, and perhaps you could share a few comments on that.
Yeah, so no, I appreciate it. We picked up our asset. It's just outside of a little town called Tonopah, Nevada, halfway between Vegas and Reno. The highway that connects the two cities cuts right across our project. So from an infrastructure point of view, it doesn't get much better than that. We started drilling it, as I said, about 2 years ago this week, I think. Announced our first drill hole at the end of July when silver was $30 and gold was kissing its all-time high there. And since then, we started with 0 drill holes in our database, and we've taken it from discovery through to putting out our maiden resource estimate last month, right as silver stocks started tanking. But what this maiden resource shows is that we've got on a diluted basis, mining diluted basis, the highest grade silver development project in the industry right now at 446 grams per ton, and that's just silver and gold in there, and we've got 42 million ounces. So this is what we've effectively got is 2 different vein systems. We did a first pass of drilling just to figure out where the veins were, to do a sort of a back of the napkin resource estimate here. Now we're doubling back. We've got drills turning right now. Our model is really, really good, so we know where some of the gaps are that would benefit from a little bit more drilling. And we've also stepped out significantly from where this resource ended off. So we think we can expand this very, very quickly. We've got drills turning. But it's high grade, and in this in any market, grade is king, right? We're not after the biggest project. We're after the highest grade, high margin operation that we can get our hands on, and being on private land in Nevada, that it doesn't get much better. So for now, we're just I guess upcoming, we're going to be filing our technical report, which goes into significantly more detail than just the news release went into for the initial resource estimate. We've got a resource expansion program underway. Eric Sprott made a good financing into us back in the beginning of March, which sets us up really nicely so that we can just keep putting our head down and going pedal to the metal with the drills. And we're actually drilling a brand new project. It's actually just directly north of our Tonopah West property. And it would have been never before, the old timers would have missed this back in the day, but, using our model, using our geophysics and a whole bunch of data points that the old timers didn't have, we think we've got a good potential to make some new discoveries, very, very close proximity to where we've just announced our maiden resource. So lots to look forward to in the short term, and expecting some drill results shortly, and expecting the technical report very shortly too.
Yeah, and Andrew, it was interesting. I was watching your metals investor presentation, and you talked about the history of the region. where they were finding a lot of silver. That's right around where they found the Comstock lode. Yet then we had silver following the Great Depression go from $1 to 25 cents. I see Peter's nodding. He's like, that's a real sell-off down there. But quite an interesting area. And I know it's going well with Galen and Suma Silver in that same region too.
Yeah, well, the Walker Lane district of part of Nevada hasn't been as hot since the Comstock lode and Tonopah were cooking along, over 100 years ago. You're seeing lots of large companies pulling the trigger on M&A opportunities. Anglo Gold just spent $600 million Canadian buying a company called Corvus Gold, which is about 60 miles away from us. Then Centerra Resources just purchased a big asset for $200 million US, literally 10 miles away from our project. And Kinross, who, they've got their Round Mountain mine, which is only about 30 kilometers north of us. They've been making strategic investments into some companies directly, within 5 to 10 minute drive of us. So you're starting to see a lot of big companies. Well, jurisdictional issues have never been more top of mind, right? Obviously, the whole Russia situation, but I mean, even in Peru, which is one of the top silver producing regions in the world right now, I mean, you're seeing headlines of locals actually burning down mines. I mean, there was 2 different mines last week that were overrun by militias and they were set fire on. That's not going to happen in Nevada. Mexico, they had COVID shutdowns, and Mexico is the #1 silver producer on the planet by a country mile. And lots of these mines were shut for 3 to 6 months at a time last year. And it's not like turning off a switch, right? So this came off of the bottom lines of some very, very big companies. So, our high grade deposit on private land in Nevada off a highway, I think I wouldn't be surprised to see some interest from an M&A point of view on us or on the district from the consolidation point of view very quickly, especially now that we've established baseline numbers and can say it's the highest grade project out there of this stage, and we've got a clear path to grow it. So we'll see, but for now we're just deploying capital. As I said, 62 cents to find it, and we're trading for about $2 an ounce once we can deliver it. So that's a good that's an investment we'll make any day.
Well, congratulations on moving things forward. And Andrew, perhaps what's the best way for people to stay in touch as you have more updates on the project?
Yeah, you can just follow us on Twitter at BRC Silver, and then obviously our stock charts. On the TSX Venture, we trade under the symbol BRC, and on the OTC, we trade under BKRRF. So the best way to follow companies is to get some skin in the game. This is not investment advice.
All right. Again, you can find Andrew at blackrocksilver.com and Peter at Silver Stock Investor or the Great Silver Bull. Gentlemen, thanks for tuning in. Hope this was helpful for people at home where it's a confusing environment, with so many variables. I don't know that there's a set answer, but at least that's the way that I approach it and some of the reasons why. And hopefully that is helpful in forming your own decisions and opinions. And with that said, thanks for tuning in, and we'll see you again tomorrow.